I'm Ralph Mitchell from CMRI in Sydney, and I'm not going to speak very much other than to introduce the next people and the background to why they're here. We have worked with Unimutual for several years now, and I thought this group might appreciate understanding the business model and the opportunity if you don't know already. Like a lot of you, I suspect we use an insurance broker or consultant to identify our different risk management needs and match up, with underwriters who give you the best quote, etc., for each type of coverage you need. A few years ago, we hooked up with Unimutual for our property and contents insurance. They were very, very competitively priced, but much deeper and broader coverage of a lot of the items involved in that. And we continue to use other insurance underwriters that are brand names you probably know for different sorts of covers, but we have found them very good in this particular space. We're renewing various coverages at the moment and looking at perhaps expanding to a few other areas there, assuming Gerald and Ewing can sharpen their pencil a little bit, hint, hint. So I will leave you with three things to think about before I pass it over. Number one, the prefix uni should be a huge hint on this. The core business of Unimutual has been to insure the majority of universities in this country. So while we're probably not here so engaged in the student aspects of this, certainly the research matters are very, very relevant and overlapping, and there's a huge amount of resources and knowledge in the research space. Number two, Unimutual is not a for-profit company, it is a not-for-profit mutual association, and hopefully this flows through into better premium setting and just as importantly, if not more important, claims settling. And not to say that all the capital contribution required from members here is unlimited risk for us, and they use sophisticated insurance products to lay off risk in overseas insurance markets, so I don't think this is some esoteric sort of treatment of things. And the third thing I'd point out is there's a huge amount of engagement and information flow here with Unimutual, much more than anything else I've been associated with. So there are very timely incident reports, the day after things happen. There are sector updates, teleconferences, seminars. There's a national conference that gives you an update on the insurance market generally, and get to share stories and network with people. So my only comment is next time you're renewing coverage, at least be aware of Unimutual, perhaps consider them, or better yet, have your insurance broker consider them and see what they say. So with that, I'm going to introduce Gerald Ewing, who's the CEO, and Ian Mundy, who's the Member Services Director. Thanks.
Thank you, Ralph. And I'm suffering from a bit of split personality disorder today because I've got three titles. I've got, as you see up here, CEO of Unimutual, which is my day-to-day job. I'm also the CEO of Regis Mutual Management, which looks after Unimutual. But in your brochures, you'll see I'm down as the CEO of the Children's Medical Research Institute. I can assure you I'm not. That is a typo. The other thing I wanted to say is that as we're in Canberra, I thought I should declare up front that I'm not eligible to run for a state government position. I do hold dual nationality. I haven't revoked it. I am a naturalised citizen. I've been here for 22 years. But there's a cricket match on in Adelaide at the moment that I'm watching with rather keen interest. So with that, I'm going to move in to talk about really why are we here today. So Ralph did a great job of introducing us, but really what Unimutual does for the university sector and for your sector also, because we have a number of MRIs that are members of Unimutual, is we facilitate the work you're doing. We facilitate research through providing that coverage in the background that enables you to have confidence in the way you conduct the research. We're particularly engaged with the storage of samples rather than data, so the materials you work with. And Ian's going to talk a little bit more about that later. But also importantly, we're very much engaged with the liabilities that attach to medical research as well. So Unimutual provides cover for the university sector and for your sector. Currently we're a small mutual, we've only got 53 members, so not a dissimilar size to Amri in some respects. But we currently provide protection for over $65 billion worth of assets, so it's a very big portfolio. and a large proportion of that is research material that's held in universities and other entities. And of course there's the liabilities that go with all of that and with that work. So we cover the physical assets, we also provide a liability cover, including medical malpractice and clinical trials. And when it comes to data, we probably have a very unique set of data around clinical trials and medical malpractice and research in the university space. So I'm not going to spend too long on the detail around the background to Unimutual, but what I am going to do is just give you a very quick summary of the history. And I won't talk to all of these slides, but I think it is important just to look at how Unimutual got together. It is a collaborative organisation, and as you heard from Ralph, on a not-for-profit basis, owned by its membership. So we're actually owned by the universities and the research entities and others that are members of Unimutual. And it all started back in the late 80s, early 90s, when universities were finding it impossible to get the sort of liability cover that they needed. And this was particularly driven by their research activities, which the liability markets were finding very hard to measure, understand the exposure, and consequently costs went through the roof, the breadth of cover wasn't available, the limits weren't available, and in some cases cover wasn't available at all. And so a group of universities got together and said, is there a better way we can do this? 4 universities initially, University of Queensland, University of Melbourne, University of Adelaide and the University of Sydney decided that yes, there was a better way they could do it collaboratively, leveraging the strength of the sector, which is exactly the sort of strength that you have here. And they said what we will do is we'll look at using that strength to collaboratively procure cover. And they found that the best way to do that was actually to hold a level of risk themselves, pull that together amongst the 4 universities, and then buy cover up above the levels that they retain. And that is essentially the mutual model that is still in place today. It has moved on a lot, it's grown significantly. And from those small beginnings, we'll go forwards or backwards? So, let's put these on. So I think I've covered a few of these already, but really it's gone from strength to strength. So from that small beginning with 4 universities, Unimutual quickly grew to cover a large number of the universities in Australia and other entities. Today we cover 27 of the universities, including most of the major universities in Australia, and obviously protecting all of those research risks that come with large research universities. For us, it's very important to understand the work that universities do and focus on that. And that's, as a specialist, that's exactly what we do. And I think our previous speaker mentioned, about talking to academics. That is something we do regularly. Understanding academics, understanding research, understanding how they manage their programs is very important, and that's particularly important when it comes to when things go wrong, which is obviously when we come into the picture and we have to deal with the claims. And one of those big areas is around loss of research material, which Ian is going to talk about. So how does it work? Very briefly, I've already explained that the model works around pooling a low risk which is shared amongst the members, and then purchasing insurance and reinsurance above that. Ultimately, what it's all about is giving you the best cover at the best price. So trying to drive efficiency through operating a model that is as close to cost as possible. We're keenly conscious that in the university sector, and it's no different for MRIs, that making the funding dollar go as far as possible, so that as much of it is spent on research and in universities, tuition and education is the goal. So trying to really keep those costs down, but giving the best cover we can at the same time. The cover in Unimutual is discretionary because it is member-owned as a discretionary mutual. Two reasons for that. The primary one is that it enables it to operate much more efficiently, because if we were to be set up as an authorised insurer, it would need heavy capitalisation. That capitalisation would have to come from the members. It actually operates a very low capital model, but very efficient model, where most of that capital is provided through risk transfer to the insurance and reinsurance markets. The other element of discretion is we operate with a policy wording, protection wording, that tells you what's covered, what's not. Any claims within that wording are obviously met automatically. Where the discretion gets exercised is around the edges, things that are not expressly included or not expressly excluded. And certainly what we found with universities and research entities is that is very helpful, because it gives us the flexibility to look at what you really want to have covered and what needs to be covered. And there are many examples I could give of that, but perhaps the easiest one to talk about is equine flu in Australia, where horse movements around the country were restricted at that time. A lot of universities have veterinary schools, medical schools that suffered losses as a result of those restrictions. Those aren't automatically covered and weren't covered by any policy in Australia. We had a number of members in that situation, and we were able to look at that and say, yes, we'll cover those losses. And it's important because as a member-owned organisation, you, the members, actually have control. And I can say you, the members, because there are actually a number of members of Unimutual in the audience today. We've got not only the Children's Medical Research Institute, where Ralph is, but the Hunter Medical Research Institute, the Mundy School of Health, Translational Research Institute, and Black Dog, so all members of our REIT, but also members of Unimutual. When it comes to discretion and looking at those claims, that discretion is exercised by a board drawn from the membership, and the membership decide. And of course, the membership understand better than anybody what are the risks you're really facing and how you want those managed. And that's really, really important. So, a little bit about Unimutual strength. We've been around for a long time now, 27 years. The only thing I really want to pick out on this slide really is around the risk management, which is one of the things that Ian is going to talk about. We have a strong focus on risk management with our members, and that extends to not only the emerging risk newsletters, the webinars, the sort of things that Ralph mentioned earlier on about sharing experience and really helping members to manage exposure and mitigate risk, but also with practical advice, getting out there and actually spending time on site with the members. And ultimately, anything we can do to improve the individual risk profile of a member is not only good for that member, it's good for the membership. And anything we can do that's good for the membership in terms of the risk profile ultimately is going to translate to lower cost, and that's lower cost for everybody. And that is the driver. As I say at the bottom, broad cover and efficient pricing. And on that note, I'm going to hand over to Ian to talk to you about some of those practical challenges. Thank you.
Thank you, Gerald. A little bit of background about me. I have been working in the insurance industry for 22 years, 15 of those in the mutual space and the rest in general insurance. So what I'm going to talk to you about today is some practical examples of how Unimutual works. And what I'd like to do is illustrate the difference between working with like-minded groups, cooperating and working together to control or transfer a risk, as opposed to just straight risk transfer. And when we talk about risk transfer, I'm only going to the general insurance market directly. And the differences you'll see are certainly quite different. So what I'd like to do is actually run through a couple of examples, one with my insurance hat on and one with my mutual hat on. And when we look at risks, we look at them quite differently. So I'm going to start off with my insurance hat on. And, fortunately, I was lucky to come across the World Mosquito Program when it was presented at our Unimutual conference in August. And it's a fantastic research program, research and control program, introducing disruptive technology to tackle transmitted disease, to eliminate dengue fever and hopefully the Zika virus. Now, essentially what happens, for those that aren't aware of it, they inject a bacteria into a mosquito, they let them breed, and then they release them into the environment. Now, with my insurance hat on, I see cane toad. I see the end risk. I see disaster waiting to happen. I see the likelihood of claim. I see frequency of claim. I see very large expenditure. As an insurer, what I'm mostly focused on is my balance sheet, and after my balance sheet, also my shareholders. So my decision making is primarily focused on external factors that aren't of the interest of the researcher. You only need to look at the share price after there's a big cat loss, whether it be fire, flood, hail. You see the share market absolutely ruin insurance companies. And all their decision making makes them ultra conservative. And are they the best fit for research institutes? Now, what I'm going to do is put my mutual hat on. So when I looked as an insurer, I got out my big binoculars and I looked at it and I magnified that risk and I made it seem the most terrible risk, and therefore I could easily say no. As a mutual, what we do is we flip those binoculars around and we see a completely different view. We see a smaller controllable risk because we understand the processes, the protocols and the risk management initiatives that form part of the overall research practice. Our thinking and actions are different because we're owned and managed by the universities and research institutes. We employ experts from the sector to provide us with advice, and we're governed by a board from our membership base. So essentially, we understand because it's what we do. So this is the only thing that we do, is look after universities, higher education and research. So rather than seeing cane toad, Unimutual sees Nobel laureates. We see a completely different view and we act in a different manner. Now this is all great in theory, but what does it look like in practice? Well, in 2011, we started seeing a spike in claims in temperature-controlled environments. This is where you store all your tissue samples and all of your significant assets. In 2011, it was around about 1.5 million. It grew up to 1.5. Grew quickly up to 3.5 million by 2013, and that was a significant worry for us. A traditional insurer, putting my insurance hat on, would look at that trend and say, increase in frequency, increase in quantum, we're either going to increase your premiums or we're not going to insure you. Unimutual looks at it in a different manner. We look at this risk and say, if we want to continue as a mutual, we need to get control of this risk. So what did we do? We went back to our members, and through collaboration, we identified that there are obviously varying temperature-controlled environments, there are varying shutdown procedures, inconsistent protocols, no central locus of control. It was a disaster. It was just a big mess. So we went about working with our members to establish a risk management program to help control and eliminate the risk. And you'd have to say, from the claims experience that we've got now, you'd think that program worked. Now, I've obviously oversimplified this just for today because I know it's just between me and you and lunch. At the same time as we had discovered this claims spike, we also had discovered that universities and research institutes weren't cataloguing or keeping any detailed understanding of the value of their assets and keeping it in a format that, if there was a claim, we could present that to a reinsurer and actually have that paid. Now, if this claim went to a traditional insurer and you had no way of quantifying your assets, you wouldn't get paid. Unimutual has some discretionary cover, so there are opportunities that that would actually come about for that claim to be paid. But what we did was actually change this risk profile. So what we did again was to go back to the members, we built a database so that they could actually store and catalogue all of their assets, and we also helped the universities and research institutes put a value around it. So now, as Gerald touched on before, we have close to $1.6 billion of assets just in temperature-controlled environments across the university and research space. So realistically, Gerald's covered off on a whole range of the detail, but this is just an example of one of the hundreds of risks that we control on an annual basis. And we certainly look at controlling these risks with a different with a different viewpoint. So what I'd like to leave you on today is just a brief summary of how Unimutual views the risks as opposed to how a traditional insurer does. So our main goal is to work cooperatively with members in a manner so that risk can be shared, controlled and understood. And this is lost in the general insurance environment. What we find is that there is an increase in commoditising or having, as Ralph indicated, a cheap price for insurance, not necessarily controlling the risks. What we do is work with our members in order to get them to understand their risk in totality. We continue to provide leading edge cover, always being and having the industry gold standard, and we will not compromise on the cover to fit a price. We'll also continue to employ experts from the sector to maintain industry knowledge and a skill to handle both emerging and accumulating risks. But the biggest thing, and the thing that we're proud of the most, is that we like to pay claims. This is our sole focus. It isn't our money, it's the members' money. So you as a member are entitled to having your claim paid. So we are not working to not get the claim paid, we're not dragging out a claim. We want to make sure that we get the money back in your hands as quickly as possible so your research can continue. We also provide the discretionary cover that Gerald had touched on previously, which is if a claim falls outside the policy, what you have is an option of taking this to a group of your peers to have this claim paid. And there hasn't been a discretionary payment that's gone up to the Unimutual board that hasn't been paid that I know of. We also provide worldwide cover, so this enables research to be continued collaboratively overseas. But our biggest focus is to control and make sure our premiums remain affordable. We want to, any aggregated or excess premium, we like to return back to members in either cheaper pricing or risk management services, because we know you would rather spend the money on research than spend the money on insurance. So that's all I have for today. If you would like to ask either Gerald or myself some questions, we're free at lunch, but we can answer some now.